G'day viewers, I'm Adam Stokes. Welcome back onto the channel where today we're joined by a very special guest. CJ Konstantinos was brought to my attention by many of you, the subs out there who wanted to talk about Bitcoin and inflation. CJ, thank you for joining me.
Yeah, thank you for having me. It's great to be here.
CJ, you don't even have a YouTube channel, yet you are famous on YouTube. My viewers made me watch some of your content where you've appeared on other YouTube channels, and some of your insight into inflation and crypto blew me away. Let's wind it back a bit. How did you get into Bitcoin?
Oh, yeah, great question. This guy named Jeff Berwick, he's still around today. He calls himself the Dollar Vigilante. Man, all the way back in 2013, he told me about Bitcoin, and I wish I'd listened. It took me a year of just watching to kind of get comfortable with it and to learn a little bit about it. And then finally in 2014, I took the dive. And from there, the rest is history. But I have a background in accounting and finance. So when I started learning things that were opposite of what I paid to learn in school, that's really what sparked the fire in me, because our professors, the university programs, they do teach very well, but they don't teach all schools of thought. And that's the problem. They're teaching you how to think and what to think instead of how to ask questions and to learn. And that was kind of like my epiphany moment when I started studying Bitcoin, getting into Austrian economics, and just these different schools of thought that actually were better science, right? Because economics is a science. The government has really turned it into a math, and they use all these equations and it's that or nothing. But if math is universally true. Doesn't matter if you're Chinese or Russian or American or Australian. If you do math, it's universal. You're going to get the same answer. But if you use different types of ideologies to manage your economy, if it's independent, if it's democracy, if it's communism, whatever it is, you're going to get different results. Sometimes even with the same, some countries are raising interest rates to fight inflation, like Argentina. But look, it's not working. They don't have the same characteristics and the same ideologies of the United States dollar and our society. So economics is truly a science, and that sparked my passion when I got into Bitcoin. I started to realize, whoa, the people or the person who made this, they had to understand more than just one thing. So much went into understanding Bitcoin and economic incentives, ideologies, incentives, the whole nine yards. And from there, I was hooked.
I can really relate to what you're saying. One of my degrees is economics. And I only say that because I actually thought I should have known better because, like you, I went through this, institution. Some ways I say an indoctrination because I thought I knew money. But it wasn't until I got into Bitcoin I realized, hey, I actually didn't know anything about money because what I was being taught was, and I don't even know if it was malice. I don't know if it was malice or ignorance or perhaps a bit of both. But it wasn't until I really got into Bitcoin that I truly understood money. And when I first came across Bitcoin, I thought, well, it's this internet funny money. I'm staying away from that. And in fact, ironically, it was around the same period as you, around 2014 mark. But I didn't really pay too much attention to it. But then, of course, once I started listening to some really intelligent people explaining it to me in greater detail, I actually had to take it a step back and say, well, what's money? And when we look at money as a store of value, a medium of exchange, and a unit of account, we think we get it. But then you go a step further and say, well, what's money linked to? Now, most people still believe that we'll go with the US dollar as an example because it's the global reserve currency and it has the biggest money supply. Most people think that the US dollar and other dollars and euros and pounds and rupees and whatever is linked to gold, but it is in fact not linked to anything. Can you help us unpack what that means for the world and how that leads into inflation?
Yeah, absolutely. So I love where we started with this, studying the money, because in school they tell you this is what money is. But I have to shout out Mike Maloney. There's a difference between money and currency, right? Two different things. The US dollar and all of these fiats, they're currencies, they're derivatives. And that's what you're talking about. What is it backed by? And I think that really plays into part of the confusion, because the dollar was a derivative of gold. Gold originally backed the dollar. You could redeem those dollars for real gold. And that kind of solidified in people's mind that the dollar was backed by gold. And then it becomes, this is where the social aspect of this comes into play. It was in the mindset of the people that it was backed by gold. And here we are today where we are 50 years gone after a quasi gold standard. So there's no gold backing the dollar. The dollar is not a derivative of gold, doesn't represent gold, but yet some people still think that. But in 71, when they pulled the backing of gold off of the dollar completely, that's when this last monetary system change took place. So we're over 50 years into this currency life cycle right now. That's why we're seeing what happens at the end of a currency life cycle. There's limited times to these life cycles, even to the original dollar that was gold backed. So these cycles are picking up pace. And today, the dollar is a derivative of debt. That means that the dollar is really a promise of tomorrow's production. Bitcoin is proof of yesterday's work. And that's where we fall into the problems that we have, because as the government continues to print and print and print, what they're really doing is they're pulling the promise of tomorrow's production. They're pulling tomorrow's demand into today, and that destroys the future. You can't build a sustainable economy on top of a debt derivative. And then when that debt derivative is then leveraged and created in different derivative products, and you have debt on top of debt, where you have times 10, times 100 types of leverage, like the $1,500 trillion derivatives market, where the banks go and gamble with our deposits, that is not sustainable. And if one thing goes wrong, the whole system will collapse on itself. That's why they're having emergency meetings last weekend. That's why they're having emergency meetings this weekend. And this banking crisis is just getting started.
The global financial crisis of 2008 should have woken the world up to this, but seemingly it never ended. We just kicked the can down the road. And I like to talk about Peter Schiff, because Peter Schiff actually hates Bitcoin with a passion. However, where we come together is that we all agree that there is no road to kick the can down anymore. We've run out of road. Fiat is the biggest Ponzi scheme in the history of humanity. It is market failure in its essence. It's linked to nothing. And as you mentioned also, we're at that 50-year mark, because if you look at money historically, particularly fiats, it's kind of around the 50-year mark where it all falls to pieces. We're at the 52-year mark. So we're overdue for this to go down. And some would actually say, well, actually went down in 2008. We've just, as I said, kicked that can down the road. That has come to the end. There is nowhere for it to go. I then listened to Robert Kiyosaki. Now, these are kind of old school guys. And he's been recently releasing emergency broadcasts, which he's never done before. And although he's built his wealth on debt, Robert Kiyosaki says that this is not sustainable. We cannot do this anymore. So for the audience out there, if you think you've got two guys here saying, well, we love Bitcoin because yay, Bitcoin and go Lambo. No, it's not that. What it comes down to is that fiat is dead. It was never going to work. It doesn't work for anyone, irrespective of the color, the language, the flag, whatever. It will always collapse. Now, I think, CJ, where you and I share our values, different to someone like Peter Schiff, who doesn't like Bitcoin, where you and I share our values is we say, we have a solution. The solution is a hard, sound, immutable, open, borderless, censorship-resistant money that is available to everyone but controlled by no one. How do we move from the mess that we've got at the moment, which is fiat and the end of this Ponzi scheme, into a hard money like Bitcoin, as opposed to another country rising? And this is where I'm going to weave in a little bit here. BRICS. Is it BRICS versus Bitcoin versus the US dollar, or is there something else that we need to consider?
Yeah. So I'll start with the system dying in 2008. I believe that it's absolutely true that the system was in critical condition in 2008. And what we did was just perform CPR. And we kept the heart going. We kept the system breathing. But now it's becoming more and more evident that we're done. The system is the end of the currency life cycle is here. And, Peter Schiff, he does a great job of explaining why that's the reality. And he does a great job of explaining the economics behind it. So I don't disagree with him there. I do think he's missing it with Bitcoin. I don't know if it's because he's salty, because he knew about Bitcoin when it was worth dollars, and he just never, just put in even just a little bit. He's like a trading currencies, and he doesn't even just try it out, and then he sees it blow up. That could really create spite in somebody. That's the only reason.
And he's competing with gold, because his company is gold. If you think of it, his whole company. So I'd say he's kind of compromised in that sense. Sorry to interrupt.
Yeah. No, you're fine. And I'd actually like to touch on that later, because the all-in sustaining cost of gold and the financial analysis that you would make when investing in gold and gold miners is applicable to Bitcoin as well. So we'll talk about that with Bitcoin energy value. But I do want to talk about Rich Dad, Poor Dad as well, because he built his entire wealth off of debt, like you said. Well, how did he know how to do that? Debt was an asset for the borrower, not the lender. That's the problem of what we've had here with inflation and with interest rates, right? The real rate is negative. So if you can go out and you can get a mortgage and you can lock in your mortgage payment for 30 years, I mean, there's a good chance that people who are locked into their mortgage for the next 30 years will one day be able to walk outside, pick dollars off the ground, like you see in Venezuela with the bolivars sitting on the curb in the street, and then walk into the bank and pay their mortgage, because it becomes less and less of a burden because they're printing more and more money. So debt is actually an asset for the borrower, and the governments and the banks have rigged it that way because they're the borrowers and we, the people, are the lenders. So they're taking advantage of the system and they've manipulated it. And that's what he's seeing. He's also taken advantage of the system because he's built his entire net worth on debt and releveraging debt and refinancing debt and building debt on top of debt. Because when you establish the correct cash flows, you can build an unlimited empire, basically. And that's exactly what he's done. And he's actually getting paid in terms of purchasing power to do it. And the government is using that same little trick. But I do want to just touch on this end of the road thing. I don't necessarily agree with that. I do believe that although the system is dead, this can continue perpetually, because the only difference between inflation and hyperinflation is trust. There has not been one case study that I've been able to look at where there's been a mathematical point that can define hyperinflation. Sure, the textbooks will tell you 50% per month is hyperinflation. You can't, that's the mathematical definition. Okay, that's fine. But other places have gone higher than that, or even not gone as high as that, and still entered into hyperinflation. So again, we're back to this: is it a science or is it a math? And you can attempt to define it mathematically, but I believe the only difference between inflation and hyperinflation is people losing trust, because that's when the base layer of demand. You said the dollars are the global reserve currency. Well, all this dollar denominated debt requires people to go buy dollars, and that demand on the dollar maintains its perception of value and purchasing power. I mean, you can see it in the DXY. When they started raising rates, DXY started going up. Now that they're at the top, DXY looks like it's at like a head and shoulders point, and it looks like there's no floor beneath it, especially because interest rates look like they're not going to be able to continue raising them. They might be able to hold them for a little bit, but eventually they're going to be forced to come back down. Then what's going to happen to DXY? This whole idea that we have to be at the end of the road. No, if people are continuing to be trustworthy of the powers that be who have the ability to print, and they keep using their definitions of inflation and hyperinflation and money versus currency, and they keep buying into that narrative, well, then they're going to be able to continue to do this perpetually. And perpetually, it'll get worse and worse and worse each time they do it. But as it gets worse, eventually the people are going to lose trust. And it's when the people lose trust that they know that they can't hold those dollars anymore, because look, they went into their boss and they said, I need to get paid every single day I come into work, because if I don't get my money and go to the grocery store, I'm going to be able to buy less tomorrow. When we get to that point, and we're not at that point now, but we will be at that point now, because they're going to continue to abuse the system. The system is designed to extract value from the people, not to deliver value to the people. So as they continue to extract and extract value, there will be a point where people stand up and say, that's it. This is where I draw the line. And as soon as we hit that point, whether they're printing money or not, we will go into hyperinflation. So there is some room for them to keep kicking the can down the road and spewing their lies. Actually, I just shared a chart on my Twitter that shows monetary velocity. Monetary velocity had been down significantly. And one of the things I was watching for post-COVID, when we brought rates down to zero and started quantitative easing, was, I wonder how fast this monetary velocity chart is going to go up. And it really didn't move at all. I was kind of surprised. And it's been one of the things on my alt account, BTC Fair Value, where I share mining information about Bitcoin. All the way back in February of 2022, I mentioned, one of the signs that we'll see when people start to mistrust the system and there's a higher chance of moving from inflation to hyperinflation, we'll start to see the velocity of money increase. So in that chart, you can see the velocity of M2, which is circulating currency supply, as well as demand deposits. So yeah, you can see there in 2020, we bottomed, but I was expecting a very aggressive move with all that money coming into the system. right? You'd expect that influx of money would then stimulate the economy, increase velocity, increase production and consumption. But the statistics really didn't support that. And now we see here, 3 years later, velocity is starting to skyrocket. So, I think this is very interesting because it's definitely not a strong economy that's creating this velocity. So if it's not the strong economy creating the velocity, then what is it? And it very well could be that people are starting to wake up and say, that's it. I want out of the dollar. I want out of the treasuries. I know now for a fact mathematically that I can't store value. I had a friend who bought $1 million treasury note, and they said, well, this is great because in 5 years I'm going to buy my house, and with this yield, I'm basically not have to pay the real estate agent his commissions. Well, by the time we got to that, he can't even afford the house anymore because the house went from being like 900 all the way up to like 1.3. And, he didn't earn anywhere near 30% in interest. When the time he bought it, it was like 2% interest. So he thought he was going to store his value and then buy his house. And now he can't even afford that house because the house gained in value faster than the dollar preserved any purchasing power. So that process of storing value, not just on a personal level, but for businesses as well, it's a shocker. And treasuries were supposed to be a financial tool to store value over time. And of course, they were called risk-free because the government can print the money. But now they're starting to realize, some people like us who would say, that's not risk-free. There's no such thing as risk-free. That's a joke. The risk wasn't whether or not you were going to get paid the money. Of course, the government has a printer. They're just going to print it and give you the money. You're going to get paid. The real risk was, what are you going to be able to buy with that money at the time you get paid? Right. So that's why you see a lot of these inversions with even the 3-month and the 6-month. The biggest, smartest, most sophisticated investors in the world who haven't quite yet figured out where to go with all that equity are rolling over into 3 months because it's the shortest time frame of risk of getting that maturity plus principal, where they don't have to worry about selling it in the open free market and taking a principal loss because they're raising interest rates. So, all that demand on those units, it's just telling. We can't get into this situation unless we have these things. And Peter Schiff and Robert Kiyosaki coming out and saying those things, it's really just the cherry on top for everybody to know now's the time to be paying attention. Right now is when you need to be learning about Bitcoin, about store of value, the difference between money and currency, the real definition of inflation, not the government definition of inflation, tracking CPI through older government equations that were more accurate than the manipulated equations and hedonics that are built into the system right now. I mean, all of these things are being used to control the narrative because they need to, if they can control the narrative, they can get you to trust them. And if they can get you to trust them, they can continue to extract value from them. But the second you stop trusting them is the second that they lose the power to extract value from you. So it's a push and shove game that we're in the middle of right here. And until the people wake up, we're going to be stuck in the middle of that game.
I want to unpack this trust thing a little bit with you. Now, in preparing for this interview, I was very worried that I agree with so much of what CJ says. I'm worried that this is just going to be an echo chamber where you and I are sitting together going, yeah, man. But I think I found one thing that I'd like to challenge you on, because as I mentioned, everything that you have said in your past work, it's like, man, this guy's speaking my mind. But I want to talk about this end of the road concept. So there's two parts to the US dollar that's very interesting to me. So absolutely, within the United States economy, as long as you can lie to the people and convince the people and tell them it's all right while the buildings are burning down and that there's nothing to see here and it's okay, we'll print more money, but it's not really printing. They lie about what's in the CPI basket, or they move the CPI basket around the goods and services that are in there so they can get a better rate. There's real inflation and what they tell you what inflation is. And I definitely want to unpack that with you a bit later, because I've been saying that for a long time as well. People don't quite get what this inflation thing is. They think it's just about, I think what they're doing is sometimes they mix up purposely supply and demand versus money printing. When there's something in low supply and big demand, the price goes up and they're like, that's inflation. It's like, well, that's very different to a money printing machine just printing out fake money, which puts all prices up. But going back to the global reserve currency, when it comes to trust within an economy, absolutely, I agree with you entirely that you can pull these levers and play these tricks to convince the people that, hey, it's worth trusting. But let's look at the two big things that put a demand on the US dollar. First of all, the US dollar is the petrodollar and the petrodollar is the US dollar. So to keep a demand on the US dollar, the sale of pretty much all petroleum products around the world requires the purchase of the US dollar, which puts a demand on the US dollar, which keeps it propped up. The second part to this is the SWIFT network, the exchange of money for anything going from Australia to the United Kingdom. One way or another, it's going through the SWIFT network, which is a US entity, and putting up demand on the US dollar. In the background, there's a conversion to the US dollar, then it goes to the British pound sterling. So the two biggest demands on the US dollar, and there are a lot of demands on the US dollar, but the two biggest ones are the petrodollar and the SWIFT network. Now, the SWIFT network is pretty easy. Why do I need the SWIFT network now when I can just send you a stable coin or Bitcoin, or say I'm Russia and I'm even cut out of the SWIFT network, so I can't even use it even if I wanted to. So bang, straight away, a reduced demand on that currency because of the reduction on that network. Then over to the petrodollar. We can see that with the war in Ukraine, when the United States said, right, we're cutting you out of this system by putting sanctions on you. What actually happened to the ruble, of course, was, well, straight away that went up in value because many parts of the world said, right, we're not going to use Russian oil anymore. But many parts of the world did use Russian oil, but instead of using US dollars to buy that oil, they either used gold or the yuan or the ruble. So internal to a country, any country, you've got these levers that you can control, but external to it, the rest of the world has basically said, in my opinion, and I want to get your opinion on this too, they've said, look, we've had enough. It's not fair that we have to go and plow the fields and pull real value out of the ground, whether it's gold, oil, or food. We have to build real cars, real electronics, real stuff. We send our real effort, our real value over to you, and you give us in return an unlimited printed funny money that's linked to nothing. The harder we work, the more of our stuff you get, and the less of this so-called valuable crap that we get in our hand. So we're actually pulling away. And you can see whether that's going to the ruble or to the yuan or to gold or to BRICS, which we want to touch on in a second. The whole world, the global community is saying enough. Now, what are your thoughts on that? How does the rest of the world fit into what's happening within the United States, control of their own currency?
Yeah, so I actually would push back a little bit on that about the petrodollar and the SWIFT network being the largest sources of demand for the dollar. I'm not sure if you're familiar with the euro dollar market, which is not like the euro currency, but it's dollars that are outside of the domestic United States banking system. So the euro dollar market, it's not only the government and US banks that can create dollars. Foreign banks can also create dollar denominated loans. And that dollar denominated loan market that is outside of the United States, it dwarfs everything else. And that market has its own yield curve that's separate from the domestic United States yield curve. The Fed is currently wrestling with that yield curve. It's calling the bluff even more than our own. And there's a lot more demand on the dollar for those dollar denominated debts than there are even just for oil. Believe it or not, it's that big of a market. It's huge. So the question becomes, how do you lose that demand? And I think you touched on it perfectly with the petrodollar, the United States shooting itself in its foot, basically, by kicking Russia out of the system and just giving them the ability to demand rubles for payment for their commodities, kind of just sparking this whole cycle where it's like, wow, we're going to lose some of the demand on the dollar because people actually need that oil, right? Like you said, people said we're not going to use it, but then they said, we need it. So there's a difference between what you want and what you need. And they must have forgot to think about that when they were coming up with those sanctions. So they've empowered Russia. And I believe that was the catalyst to Russia now working with China. I've seen some videos recently. I'm sure your subs and mine are both well aware of what President Xi and President Putin had said to each other recently, where they said there's change that we haven't seen coming in 100 years. The idea is that there's going to be change to the financial markets. And World War III is not being fought in Ukraine. It's being fought in the financial markets. And it's a war of attrition because it's a race to zero. All fiat is a race to zero. It's whoever can, all governments understand that, look, we only have a limited amount of time left that we're able to print money and buy real things. We only have a limited time left where we can steal the wealth of our people and use it for our own benefit. So it's really a race to zero. And China and Russia are putting the United States in a position because they put themselves in a weak position. It's almost like we were all at a standstill, right? The dollar was winning. Nobody can get a foot up. But we made the wrong move. Like, you always wait for your opponent to make the move and then you counter strike. You don't make the first move because you're putting yourself out there, especially when you're already in the winner's position. We were already in the number one position. So we don't have to make a move to gain an advantage. We have all the advantages. So you stand still and then you only make a move if you're forced to make a move. They weren't forced to make a move. We were, and I think a lot of Americans feel that way. I don't think a lot of Americans are in support of the war in Ukraine. I don't think they're in support of sending hundreds. I think it's over $100 billion now that we've sent to Ukraine. So the American taxpayer is being taxed without proper representation. That money is being funneled over to Ukraine. I've seen some interesting topics of Ukraine connections with FTX, and who knows how much of that money went into FTX and where it went from there and where it got funneled back to. But there are a lot of things that are being investigated right now in the United States that could very well lead to the uncovering that a lot of that money that was sent there wasn't used properly. So a lot of people are questioning these things now, and the United States has pretty much dug their own grave. Those BRICS nations, especially India. India is like, I don't know if you hear about them a lot in Australia, but nobody ever talks about India here in the United States. Their population is going to be larger than China. They're growing. China is shrinking. The United States is being diminished and diluted. India is expanding. So the natural economic cycles are favoring the BRICS nations to have a better fiat currency, right? And I don't want to get any flack from this because I'm pro Bitcoin. I'm a Bitcoin maxi. I want people to understand Bitcoin is the reserve asset of the internet economy. It is the most pristine form of collateral in the world. Nothing can compete with it. Nothing can hope to compete with it. However, the only reason that the dollar and these fiat currencies are inflationary is because of the mismanagement, right? As the reserve currency of the world, the United States has the privilege of being able to run a deficit budget without causing inflation. Why is that? Well, because of simple supply-demand economics. If the demand on the dollar is growing and you don't increase the supply, the price of the dollar is going to go up. So we actually have the ability to increase the supply of the dollar as long as we're matching the growth of the global demand on the dollar to expand supply without causing positive price pressure. Right? I don't want to get caught using their definition of inflation because, like you said, inflation is much different. That's not the word that we're supposed to be using to describe the free market price discovery of supply-demand equilibriums. Those are two separate functions and two separate ideas. But we have that supply-demand equilibrium working in our favor because we are the reserve currency of the United States. And if we didn't increase the supply, but the global demand for dollars increased, the dollar would be deflationary.
I totally grasp what you're saying there, but this is my concern. The supply curve is moving to the right and the demand curve will move to the left, which means a catastrophic fall in the value, the purchasing power of the US dollar. As long as we can play this game and when I say we, I talk about the West and the world. If the United States keeps printing money, which means the supply curve is moving to the right, as long as that demand curve keeps moving to the right with the SWIFT network, the petrodollar, any other financial market, anything that's happening around, even tourism to an extent, which is shrinking very quickly in America. That's another interesting number I looked at recently. What's happening now is that the supply curve is moving exponentially to the right with the demand curve moving to the left, which means the price will have to fall through the floor. Then throw in India, which I agree with you. I've been talking about India for a couple of years on this channel. What's interesting about India is part of the Commonwealth. They are part of these Commonwealth nations. Yet when it came to sanctions on Russia, they're like, no, we're not playing that game. We'll buy their cheap oil. Hey, oil's at half price. Cool, I'll take some of that. And then, as you also said, they're an exponentially growing economy in money and people. So as I understand it, they're not the biggest population yet, but their population growth rate is now overtaken China. So they're actually growing faster than China because a lot of Chinese families just aren't having kids now. And of course, that one-child policy is really hurting China. But in any case, you've got the BRICS, you've got Brazil, Russia, India, China, and South Africa. And of course, Saudi Arabia is now looking at coming into this as well. And I listened to a whole list of countries that are coming into it. They're all coming in and saying, well, BRICS looks more appealing to us because we don't like the idea of that country printing all the money and then weaponizing the money. And we're going on many tangents here. I'm having a great time here because when we talk about Bitcoin being immutable, open source, censorship resistant, and neutral, the neutrality part is If the world plays this game where they say, all right, America, you can print the money, we'll keep the demand on it because we use your money for all of this stuff. But then suddenly America goes, hey, we don't like what you're doing, so we're going to weaponize that money by now turning it off. You've broken the deal. And if you're China and Russia, you have to break away. It's like, well, hang on a second. We played your game of charades and the facade of this fake money, and we allowed you to print it. And, you know, there was a bit of stability in there. But then you broke two rules. First of all, you printed, well, three rules. First of all, you broke the gold standard. In 71, you turned it off. So first, broken trust, because trust is so big in this. The second part is you printed too much of it. And then the third thing that you broke was that you broke the neutrality by turning it off through these sanctions. So these countries, they have to break away from it. They've got absolutely no choice because their people as well, they have their people to look after and their families. And so what is the alternative? Now, when we move into Bitcoin, what do you think? Will it be multiple currencies? Do we need a global reserve currency? Will it be Bitcoin? Will it be gold? Will it be BRICS? Or will it be the US dollar?
Just to touch on what you said there, I think you hit the nail on the head. And that is the definition of what I'm saying with trust. The United States people are going to be the last ones to lose trust. Everybody else has already lost trust because of the reasons that you said perfectly. So we have already used and abused this system, but I want to make sure that people know who to point the finger at, because it was not the system. It was the mismanagement of the system. So there are specific people to point the finger at and say, look, when you removed gold, when you did this, when you did QE 1, 2, 3, 4, 5, when you did these things, you sealed our fate. And I want history to remember those decisions. Thankfully, when we move to Bitcoin, we won't have to worry about knowing that history because Bitcoin will take care of everything for us. But I do believe there's going to be a period of transition. And this is why I am also a silver and gold holder as well. I know a lot of Bitcoiners give me some flack for that. And it's in good jest. I love hearing it. And you're right. But there's really one reason that I have an allocation to gold and silver in my portfolio. And that is because when this transition does take place, people are not just going to be like smarter overnight. It's going to take some time for them to figure out how this stuff works. So I do believe Bitcoin is going to, even through the transition, it will gain purchasing power value quickly, especially in fiat terms, because all the fiats are going to go to zero. But it doesn't really matter because at that point, you're not trying to buy fiats. You're trying to buy your food. You're trying to buy a house. You're trying to buy a car. You're trying to live your life. You're not interested in the fiats anymore. So who cares if Bitcoin goes to, I mean, what did gold go to during the Weimar Republic hyperinflation? $1 trillion per ounce? You know, it didn't matter. What mattered, what you could use that gold to buy. So I think through this process, Bitcoin is going to take some time to realize its full potential and for the full transfer of wealth to go into Bitcoin where it truly properly belongs, because it is a better money than both gold and silver. And we'll get into that in a second. But silver and gold definitely play their role through the transition. And I will spend my money, gold and silver, first through the transition so that Bitcoin has more time to reach its full potential as the reserve asset, not only of the internet economy, but of the entire earth.
I know you said you're a Bitcoin maxi, but there is different definitions to what that is. So there are 23,000 cryptocurrencies at the moment. Before we get into gold, do you have any other cryptocurrencies beyond Bitcoin?
I do. And the reason that I do is because these currencies aren't really currencies. Bitcoin is the money, right? Remember the difference between money and currency.
Yes.
Money is actually a store value. Currency is just a derivative. So nothing can compete with Bitcoin. So my definition of the maxi is nothing can compete with Bitcoin. It is the reserve asset of the internet economy. No other network can grow at the pace to compete with Bitcoin. Even if you have like another Bitcoin Cash moment, Bitcoin Core is still going to be around. It's still going to be the Bitcoin. So there's nothing that anybody can do to compete with Bitcoin or to fight Bitcoin. It's already won the fight. And all of these other currencies that are trying to compete with Bitcoin, and that was really bad for Ether, trying to become like a hard money. I mean, like it's the opposite of, if I was with Ethereum, what I would have said is, listen, guys, let's just do a split. Let's do 1,000 to 1 split. For every 1 Ether you have, you get 1,000 more tokens. And they'd be like, "What? Why would you do that?" Well, I'll tell you why you do that. The same reason people do a stock split, because number one, the price is going to go down significantly. When it went from 4,000 down to $4, that would have let a lot more people enter into the network. But most importantly, gas fees would have been 1,000 times less, right? Because it would have taken the same amount of ETH, but you would have been paying pennies per transaction, not hundreds of dollars. And it was the gas problem that even created all the other L1s that we see right now. All the other L1s are a result of the gas problems that were faced on Ether. And the way they went to handle the problem was, well, you know what? Let's make it even harder. No, Ether's not money. It's a currency that's used to manage my money. And that's where decentralized finance comes in. Yes, Bitcoin is a store of value, but it is transforming from digital gold to digital collateral. And smart contract platforms are making that a possibility. That doesn't mean the smart contract platform is worth anything. That doesn't mean that the protocols are worth anything. What's worth something is Bitcoin. These things only exist because of Bitcoin. Bitcoin is equity. The entire future of finance will be built around Bitcoin equity. That is just a fact because it's the only equity in the world that's verifiable. Even all these bank balance sheets are not marked to market, and they're using fake formulas that they get to come up with to apply a value to their balance sheet. So the picture is a lot worse than we can even imagine when you're able to look under the hood and kind of see all the laws and regulations that they've come up with in order to allow them to continue to take risk and profit with the people's savings. But Bitcoin is the number one asset in the world. Nothing can compete with it. But we need to evolve Bitcoin from digital gold to digital collateral. Remember, gold failed because it couldn't act as collateral. You could not post gold as collateral and then settle with $1 billion worth of gold with somebody around the world. It would cost more money to fly that gold around the world than maybe even an
That's
interest that
right.
you would pay to borrow against it. Bitcoin is the first asset that has quick, easy, cheap settlement, but then all of the money properties of gold. So where Bitcoin is better than gold is that it can actually be digital collateral. And the financial system is built on top of collateral. So the Bitcoin, the hardcore Bitcoin maxis, who I love, but they're out there saying, Bitcoin is the way, Bitcoin is the solution. There's no other answer. Absolutely. But do you expect all of finance to just disappear? Do you expect people to have no financial products whatsoever to exist on the marketplace? Should it only be person-to-person exchanges? That to me doesn't make sense. I mean, even if you just let personal credit go, I understand that. Let's no personal credit. But shouldn't businesses be able to take credit against their cash flows? I mean, these are just financial tools and products that help improve society and help the pace at which we can develop and move forward. And I don't mean that credit is required for that. I don't believe that at all. Value is only created by people. Value and wealth is only created by production and consumption of the people. You can create as much currency units as you want. It's not going to create wealth. It never will. That's why we're in the problem we're having today, because they believe that you do create wealth by just printing units. But no, you devalue the entire system when you create units. What you really want to do is you want to increase production and increase consumption, and properly built credit markets that are commodity credit markets that are backed by real equity and not backed by debt are going to facilitate a marketplace where the economy can grow in a sustainable way. And I really truly believe that when we do transition to a Bitcoin standard, humanity is going to move forward exponentially, not only because of truth, the foundation being built on truth, but because of the financial tools and products that can be used in a trustless way. Right now, people are worried about who they trust, how they're supposed to trust that person. Everything that's in a contract requires trust. There's counterparty risk. So Bitcoin eliminates a vast majority of that, which means that eliminates costs, it eliminates friction, it eliminates delays, it improves the business process. And all these good things are going to come from having an equity-based standard and getting rid of these debt-based backings that we were told were going to work and ultimately are proving to fail.
This is where you and I now enter the echo chamber, because that was beautifully said. And I
Thank
agree
you.
with you entirely. There is Bitcoin and then there is everything else. So when people come into the crypto land and they say to me, oh, which Bitcoins should I buy? And I say, do you mean which crypto? And it's okay. They don't even they don't even understand the distinction between Bitcoin and everything else. But that's because going back, first of all, we're very young, as in crypto is very young, but most people don't even understand what money is. Andreas Antonopoulos was very big in my journey in crypto. I call him the godfather of Bitcoin. And one of the most difficult concepts originally that I tried to grasp was trustless. And I'm like, what do you mean trustless? Well, trustless means in fact having complete trust, because you don't have to have counterparty risk of saying, well, we've got these numbers on a spreadsheet or this gold in a safe, so you can trust us. Well, Bitcoin enables trust through trustless networks where everyone can see it. And the transaction is the validation. That is, when I transact to you, that validates it's actually happened. I don't have to wait for someone else to prove that that's happened. Now, where we go to talking about putting value around the world, Peter Schiff, and I'll bring him up again only because many people are big on gold. Now, I'm glad that you said you've got gold, because I do too. There isn't just one money. And now we go again into what you were saying about just because there's Bitcoin doesn't mean there's not going to be other financial products. I say we've already got multiple monies, whether that's different currencies. We can then go into different types of currencies or different types of monies, what we value. So it might be movie tickets, bus passes, frequent flyer points, credit card points. These are all something that holds some type of value, maybe not to me, but perhaps to you. Even basketball trading cards or NFTs or Pokemon Pogs. It doesn't matter. If it has a value to someone and they're willing to trade that value for something else with someone else, you have a money and a currency. When we go to moving value around the world, Peter Schiff says, gold is so important as a global reserve currency because it's finite. And there's two parts to this. First of all, I say, well, how much gold is there in the world? And they can't answer that. We know that there's about 2 Olympic-sized swimming pools of gold that have been pulled out of the ground. But that doesn't mean that in 10 years' time or 100 years' time, that we don't suddenly come across a seam of gold that triples the supply of gold. Now, is it likely? Probably not. Is it possible? Absolutely. But with Bitcoin, we can see that supply. We already know what it is. We all agree to it. You don't have to argue with it. You don't even have to like it. That is the supply. Then we talk about divisibility. Because it's digital and we can go down to Satoshis or micro Satoshis, some people are now grasping the concepts like, oh, actually, I can do microtransactions, which is very different to what we're doing at the moment with either fiat or gold. The real second part of this is when we want to move value, as you were talking about. How do I get this collateral, this value? How do I prove it? If I'm doing something in Australia and I want to prove it over in England, what do I do? Do I get a shipping container and put it overseas into the Bank of England to say, here's my collateral? Well, first of all, that's really bad for the environment. Second of all, it's really inefficient. And third of all, it's very slow. But then I'm giving away my collateral to someone else who can control it. And then we might have a 1971 delinking of the gold where we say, America might say, well, actually, we're going to hold those gold reserves now. And here is this fake money. So Peter Schiff's example is he says, well, why don't we digitize the gold? And then I say, well, then you don't need the gold, because it's not about the gold. It's about the trust and the scarcity. Now, the counter to that is, he says, well, the reason why gold has value is because people can make electronics and jewelry out of it. And I say, well, no, that's utility for gold, but that's not why it has value. Because if its true value was for electronics and jewelry, you wouldn't have vaults full of gold. Everyone would have electronics and jewelry, and that's where the value would be. The extension to this is when they say Bitcoin has no value because it's just digits on a screen, I actually say, well, hang on a second. You have arguably the most secure global payment rail in the history of humanity that everyone can tap into. How can you not say that has value? Now, you can see there's applications, I think it's Strike, where they're building on top of this global network, this secure, decentralized global network that never sleeps, I might add. It's not like a bank that goes 9 to 4, 5 days a week with weekends and bank holidays and vacations off. This thing never stops. So the argument that gold has value because you can make jewelry and electronics out of it, contrasted with Bitcoin has no value because it's only numbers on a screen, I think it's intellectually dishonest, or perhaps it's that they just don't understand the power of Bitcoin.
What it is what we call the base layer of demand. So if you're a commodities producer, and look, commodities are not popular, so I understand a lot of people don't understand this line of business, but if you're a commodities producer, what you're looking for to even get involved in the business is called a base layer of demand. So that base layer of demand can come from wherever it needs to come from, but it needs to be confirmed first, because before anybody is going to invest any type of money in any type of production at all, they're going to be projecting out 3, 5, 10, 20, 50 years of production costs and projections. And they want to know that this is a sustainable business that is going to return a return on investment. And the only way to know that for sure is if there's a base layer of demand. So once you have a base layer of demand that you know is going to be consistent, now you can start to go to the process. But before I hop into that, you made so many good points, and I'm trying to remember in my head. I want to talk about this. I want to talk about this. But the first thing is the trust. So yeah, absolutely, you're spot on with the trust. The way I say it is like this, because a lot of people don't understand. Well, what do you mean you don't trust? Well, hold on a second. Nodes trust nobody so that everybody can trust anybody. So it's not like that within the network, everybody is just blindly saying everything works great, everything is fine. No, there are a core group of people who run their Bitcoin nodes who want to be able to verify their Bitcoin for themselves that trust nobody. They don't trust anybody. They don't take anybody's word for it whatsoever. I don't care if Coinbase said they sent me that withdrawal. I don't care if this person did that. I want to see it on my node. I want to call that transaction on I want to see how much Bitcoin I have on my node, because they trust nobody. But because there's a core network of nodes that trust nobody, that allows everybody else to trust anybody else who's using the network. So yeah, trust is that core critical component, but it's not trustless at heart. It wasn't built trustless. It's the way the incentives work within the system where the nodes don't trust anybody that affords the trust for everybody else. So he definitely ignores that point of the nodes, right? Because the nodes are like he wants to put gold on the blockchain. It's unbelievable. I've seen him be against crypto and blockchain. Now all of a sudden he's like, well, gold on the blockchain. It's like, what is going on with you, man? But the point is you still have to trust those people. Well, the nodes trusting nobody so that everybody can trust anybody replaces that trust mechanism in the real world and places it for Bitcoin. So now that we know that we don't have to trust anybody, now we can get back to this base layer of demand thing. And that base layer of demand is critical. It's critical for gold. It's critical for silver or any other commodity, even Bitcoin in the world. Because when you have that base layer of demand, when you know supply is moving against that base layer of demand, but that base layer of demand isn't going to move, now you can make better projections, right? Because the supply demand equilibrium is going to be more accurate when there's only one piece of that curve that's moving. And demand can slowly grow for Bitcoin. Bitcoin it has a base layer of demand, but that base layer of demand is growing faster than the internet grew. So that's why we're seeing such heavy price movements, because the supply is fixed. The inflation rate continues to drop. So supply is dropping against a growing demand. The price is going up. Plus the currency that we're valuing it is being inflated to hell. So it's a double positive price pressure. And that's why you see this huge price movements, because it's the free market. And that's just how prices are discovered in the free market. Price discovery is so misunderstood. It's one of those, it's just like inflation or the difference between currency and money. You say price discovery and people are like, what the hell are you talking about? The price is the price. It's like people don't take an extra second to just figure out, how does an entrepreneur come to pick that price? Do they just throw a dart and say, all right, $4.99, here we go? No, there's a cost of production involved. And with gold, I want to do it with gold because it easily translates to Bitcoin. It's what's called the all-in sustaining cost. It's what's called the cost of production. And let's say it costs like $1,800 to produce an ounce of gold. Well, if the price of gold just started selling off and started to go below $1,800 per ounce, producers would not be able to produce anymore, because it would be costing them more to produce an ounce of gold than they could sell it on the marketplace. So producers, they go out of business. They fail. And when producers go out of business and fail, that means they're not delivering supply to the market. So the base layer of demand is there, but the supply is dropping. And the free market price discovery supply demand equilibrium pushes the price back up because the supply is dropping against the demand. And as the price goes back up above the cost of production, well, then producers will then come back into the marketplace because they know that they can produce gold and make a profit. So the reason that gold has stored value for thousands and thousands of years is because it requires proof of work. It's because it requires an all-in sustaining cost to pulling that gold out of the ground and bringing it to the marketplace. And that's how producer economics protect the value of gold over thousands of years, because it doesn't matter what currency is being used, what the reserve currency of the world is. It doesn't matter if it's Roman silver or Egyptian gold. It doesn't matter. What matters is how much of a cost is there to pull it out of the ground and increase the supply, right? That's the function that protects the purchasing power of gold. Well, it's the same thing with Bitcoin. And this is the most important thing. This is the most important message I have to say. And when I did say it, a lot of people came back to me and said, where can I learn about this? Where did you hear about this? Is this your idea? Well, no, it's not my idea. Satoshi told us this. This is a Satoshi quote. I put it up on my Twitter. I don't know it by heart, but basically what he's saying is that in a commodity cycle, the cost of production is always going to generate, the price of the commodity is always going to trend towards the cost of production. But with the difficulty adjustment, as production increases, the cost of production goes up, pushing the price of Bitcoin towards the cost of production. So it was strategically designed to store value, not just through fiat hyperinflation, but long after all of the fiat currencies are long gone, because it's a function of energy input. So when fiat currencies are gone, it's going to be Bitcoin energy value. It's going to have nothing to do with the cost of how many dollars it costs to produce a Bitcoin. It's going to, how much energy is it going to take to produce this Bitcoin? And the baseline will become energy rather than dollars, because Bitcoin is commoditized energy in the form of money.
That energy is not a flaw, it's a feature.
Absolutely. And people need to understand that the creator of Bitcoin leveraged his understanding of producer economics and the commodity cycle to make Bitcoin a strategically designed asset to store value through space and time. And there is no other financial instrument in the world that was created to do this. And Bitcoin is not only the first one created to do it, but it's the first one to do it successfully.
There's so much to grasp here. And when it comes to the energy use of Bitcoin, what I actually say, first of all, it's not a flaw, it's a feature. And it's a seesaw, a lot to unpack here. Just as when I was speaking, it triggered some thoughts for you, likewise coming back this way. So it's a seesaw. So in the first instance, what are we comparing Bitcoin to? Well, we're comparing Bitcoin at the moment generally to the US dollar. So even if Bitcoin held its value consistently, its value, its price would go up because what it's being compared to is going down. But then when what it's being compared to disappears, which it will disappear, in my opinion, there is no doubt, all fiats die, it's dead, it's over, it's just when. But then when we do move to whatever it's being compared to, which I actually believe that the global reserve standard will be Bitcoin, that is my vision, its value in itself, or you might want to call it its purchasing power in economic terms, that is going to go up. Just like we can see other things that become more scarce and have more utility, there's only so much supply, but as people need it more and it's more trusted and more widely accepted, it's going to go up. So even compared to what we see it at the moment, it's just a transitionary phase. That is, we're just transitioning through comparing this to that, but that thing is about to disappear, in my opinion. When the banks come out and they say, well, we have to stop Bitcoin because it's really bad for the environment. Well, I say, did you know that tumble dryers use more energy than Bitcoin? But banks and governments aren't rallying against tumble dryers because tumble dryers aren't competing with the financial industry. And there were many things, and gold production and mining uses way more energy than Bitcoin does. And it's not available to everyone. And then we don't even talk about the environmental impacts of ripping up the ground to get little bits of gold to go and put it in a vault. So it just sits there and does nothing. Like even, I think it was Buffett or one of the traditional investors, he said that if aliens were looking down on the earth and they saw these humans ripping up the ground and spending all of this energy and time and effort to take this gold rock out of the ground and then put it in a vault and do nothing with it, I think we're absolutely insane. When you compare it to the Bitcoin network, it actually drives innovation. First of all, we're not just putting Bitcoin, if you will, figuratively or literally into a box and leaving it there. It is a network in itself. But because we can innovate, so I'm a Bitcoin miner. My journey started mining. So I have a very detailed and intricate understanding of the energy consumption of Bitcoin mining. Believe me, when you get a $14,000 a month electricity bill, you very quickly understand how much Bitcoin mining uses energy and how much it costs. But that drives innovation. And the example I give is this, my friend. The biggest bank in Australia is called the Commonwealth Bank of Australia. And its biggest building is in Sydney. And I think it's like a 30-story building. And I say, well, look, to build that building, which is, by the way, only open 9 to 5, 5 days a week, not on weekends, not on public holidays, and not during vacations, there was immense amounts of energy to rip all the materials out of the ground, How much energy do you think was used to move all of that stuff into the middle of Sydney, to build this big building, to fit it out, to clean it, to cool it, to heat it, to run all the papers and the servers and the computers in it? That is using unforeseeable amounts of energy, and it's only available to a select group of customers who have the right paperwork to use it, who are in the right country at the right time, so that centralized database can be in one place. Compare that to a Bitcoin mining farm. What I can do and what people do is they actually pick up these mining farms and they move it to where the energy is free or in excess. And that does exist. And many people in the world don't understand that. They're like, free energy, don't be stupid. It's like, no, it's everywhere. Whether it's flaring gas from gas production plants, whether it's Niagara Falls, where you have unforeseeable amounts of energy just falling off a cliff, whether it's steam with geothermal energy coming out of the ground, whether it's tapping into a volcano. To most people, this sounds insane, but energy is simply movement. That's all it really is. But I can't go to the centre of Sydney and say, hey, Commonwealth Bank of Australia, I want you to pick up this 50-storey building and the 3,000 people who work in there, and I want you to go out into the middle of Iceland and plug yourself into a geothermal spring so we can run this whole thing with steam. They'd look at me as if I was insane. But I can do that with Bitcoin. The mining is mobile, and that's where the energy consumption, it's actually better for the environment than the financial system that we've got at the moment, because not only is it mobile, but it's available for everyone and it never sleeps.
Absolutely. And there's no discrimination within the system, because
That's right.
countries like El Salvador, who are now going to be using the volcano energy, why didn't they tap into that energy before? Well, because it required demand and it required infrastructure. They didn't have the demand and they couldn't afford the infrastructure. But now with Bitcoin, they can tap into that energy and commoditize it in the form of money and profit. Well, that's not good, because the IMF and the BIS, they want El Salvador to come beg for loans. They want them to come beg for money. They want all these other countries who have a plethora of energy, a lot of it is cheap energy, to not free them from the bonds of debt slavery. Because China is a really good example of this. They financed pretty much all of West Africa. And recently they've actually called in some of the failing loans, and they didn't say, well, we're going to take your property and sell it back to raise back the principal. Basically, they said, it's our property. So they are financing West Africa and letting those West African mismanaged companies fail. Not all of them are mismanaged, but the ones that are mismanaged and do fail, they're letting them fail. They're not bailing them out. And when they fail, they're assuming ownership of the property. So they are literally using debt as a tool to accumulate property and land. And very few people have the ability, like you said, it's centralized. How many people can create money? Only governments, and when they're teamed up with central banks. They're the only two entities in the world that can do this. But Bitcoin says, well, I don't care who you are. As long as you can harness energy, then you can participate. And you can even participate in a bad way. You can even participate and attack the net. It doesn't care. All you need to be able to do is harness energy and you can participate. So Greenpeace, with their recent hit piece, they should be called Green War. And we need an orange peace movement in order to wake people up to the fact that Bitcoin is like the cleanest energy use in the world. So not only does it make sense because of the freedom and the incentives and the true ledger that it produces, because even if it was energy intensive and even if it used more energy than washing machines and all these other things that they ignore, it'd still be worth it because the value that it delivers. But that's not even the case, because the energy that it is, see, this is where economic incentives, and I love that you're a miner. We are probably on the same page because you're a miner and I'm a miner. And once I got into mining Bitcoin, that was the next level, right? When I first started studying it, it was like money versus currency and economic schools of thought. But then after I started mining it, wow, whole different game. It's like understanding gold at the production level versus just saying, oh yeah, I keep gold in my safe just in case. Once you participate within the network and you understand how much it costs to produce a Bitcoin and how much time and effort and energy and understanding and maintenance it takes to produce a Bitcoin, to earn that subsidy, it really wakes you up to the overall value of it. I heard it said like this before: imagine owning 0.6 of a Bitcoin. Well, the value of 0.6 of a Bitcoin will be 10 minutes of energy used in the year 2096, right? So when the network is like 1,000 times bigger than what it is now, and all this energy input is going into the network, you'll actually have an entire subsidy if you own 0.6 Bitcoin. So the value of that subsidy is going to be exponentially beyond the $13,000, purchasing power that it's worth today. The purchasing power is going to be enough energy to build a small town. I mean, it's going to be an amazing amount of energy that's being put into the network. So yeah, I mean, I really just love the fact that you're a miner, because the experiences that you've had bring your connection to Bitcoin to another level, and it allows you to understand the producer economics that are behind Bitcoin. And then most importantly, the incentives. As producers, we want to find the free, cheap energy. I don't want to find expensive energy. I want to go to places that are wasting energy. I want to go to places that have excess energy. A lot of these places have a bunch of excess energy. And in places like Texas, sometimes that energy is not excess and they need it within the state. Okay, work with them, come up with your contract, turn off your miners, get a special rate because you're going on and off depending on the pool on the grid. But we are economically incentivized to find that wasted energy, because the lower our cost for energy, the lower our cost of production. And the lower our cost of production, the better our chance of having a higher profitable margin. So coming from that producer perspective versus just like a retail investor really just destroys that entire narrative, because not only do the facts support our truth and our version of what Bitcoin mining is, but it's actually the economic incentives as well that will keep bad players from using bad energy because their costs will be too high. And just like we said with gold, if their cost of production is above the market price, listen, you can't produce something and then sell it for less than it costs you to produce. You're going to go out of business. This is where the economic incentives come into play. It is a mathematical certainty that miners will look for the cheapest possible energy. And it's also a certainty that the cheapest possible energy is going to be the energy that is already being harvested, but it's just not being fully tapped into.
That's right. So beyond catching that energy, it actually drives the innovation to somehow create. So my vision is this. At the moment, the transitory part is miners moving to where the energy is free or in excess. But because the production of Bitcoin, it's kind of weird. When you go into deep thought experiments, if you think of other businesses, energy is a cost of doing business. That is, it's something in the background that contributes to what their product is. But you could argue when you get right into it, Bitcoin is the energy. That is, the energy is Bitcoin. Therefore, the product in itself will drive the innovation to make that product cheaper. So in the big picture, first of all, we capture free energy, but then we figure out, because there's so much money involved in it, to drive this innovation. So if you think about the innovation of the war machine, it was done through necessity, because if you didn't do it, you didn't survive. When it comes to the innovation of mining, when I first started mining, it was relatively simple because the difficulty wasn't that high. Now that the difficulty is much higher, if I don't innovate, I die. I don't exist. I have to innovate the way I get my electricity, because if I don't, I cannot keep up in the game. Now, extrapolate that into the global stage. As you said, the good example was with El Salvador. Why would they have spent all this infrastructure tapping into a volcano to get this energy if there was no real return on it? Well, now there is a real return, not only mining Bitcoin, but in fact, they're going to discover ways to be very efficient into tapping into volcanoes, or in Iceland, geothermal springs. And the irony of that is it's actually going to save the planet. It's going to save the planet, because I now take it a step further. Bitcoin is a money of peace, whilst fiat is a money of war. And what I mean by that is, and Max Kaiser was really big on this. And when he first said it, I'm like, what does that mean? But then when I really broke it down, I'm like, oh yeah, how do you back up the US dollar? Well, you back it up with a war machine that says, we're going to clear these waterways so this can go through, because we've got the petrodollar going through, we've got the global reserve currency coming through. We all agree that you're going to use this. And if you try and go off a different standard, we're going to say you've got weapons of mass destruction, or we're going to say that there's human rights. And I might be going down the Gaddafi or Hussein routes here, but I don't want to go too far down that path. But essentially, when you look at what backs up the US dollar, it's actually violence. And that violence uses energy. Now, whether that energy is by someone standing in the street saying, wow, 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 or it's an aircraft carrier with jets on it dropping bombs, that is immensely bad for the environment. Bitcoin, alternatively, has no army. It has no government. It doesn't even have a board of directors. It has no office. It has no building. It is simply a mathematical code, an algorithm that's being generated by anyone and everyone looking for the most efficient source of electricity out there. So I actually see Bitcoin, and I like your analogy or your term of using orange piece instead of green piece. That's very powerful because it is true. Greenpeace, in my opinion, and even the founder of Greenpeace, the original founder, has said it. He came out and he did, I think it was a TED talk, or no, it wasn't a TED talk. It was a video where he said, what Greenpeace was when I started it is very different to what it is today. And that's why I stepped away from it. So I think just the word green perhaps needs to be replaced with orange.
That's right. Absolutely. And something that triggered in my mind while you were talking is that energy is a cost. So for businesses, when those costs go up, obviously prices have to go up. So kind of tying this back into inflation and how Bitcoin is going to be a net overall positive for the economy is that interest rates today are part of that war machine because it's a manipulated, controlled market. Look, if it's not okay for them to tell us the price of chicken or the price of milk, why is it okay for them to tell us the price of money? It's not okay for them to tell us the price of money, but yet that's what they attempt to do because interest rates are the price of money, right? So when interest rates go up, businesses' costs go up. And that's a function of the money system, or I should say currency system. But with Bitcoin, it's the only asset in the world that offers free market interest rates. So I like to say it this way. Bitcoin is the reserve asset of the internet economy, the only economy in the world that offers free market interest rates on its money. And that's why DeFi is so powerful. They want you to hate DeFi. They want to attack DeFi. They want to shut DeFi down because it's the only market in the world that offers free market interest rates on money. Everywhere else, it's a stated rate. So when they can state the rate of money, they can control the costs of doing business. So talk about, just the energy incentives. Well, here's a whole nother vertical of incentives just with business costs. Because now with Bitcoin, where you have free market interest rates, people can actually plan and project, and you would actually get real stability, right? Unlike people say Bitcoin's volatile, Yeah, the price is volatile, especially relative to its natural asset value, right? Because the cost of production is the natural asset value. And the natural asset value the store of value function is defined as higher lows, not higher highs, right? I don't store value by hitting higher highs. I store value by making higher lows. So the store of value that's built into Bitcoin with the difficulty adjustment and with the halvings is all about making higher lows. And we've seen Bitcoin consistently make those higher lows. The natural asset value continues to climb. But I have to be clear that the cost of production, the natural asset value, is not the price. It's like you said earlier, it's the free market price relative to the cost of production, right? That's what matters. Because look, even during COVID, in 2019, I wrote a special report called Cryptonomics. I projected that the price of Bitcoin would be, I wrote this report 6 days, I published this report 6 days after the low of the 2018 bear market. And I said, yeah, it could go down lower, but based on cost of production and the next halving, I suspect the price of Bitcoin will be between $9,000 and $14,000 going into the next halving. And I made that projection based off of my current mining cost. Well, it turned out that even though the price went down to $3,000 during coronavirus, the price was still at $9,000, still within that cost of production range at the halving. Well, why is that? Because you can trade at premiums and you can trade at discounts, but you can't manipulate energy input. And when that energy input is attached to the price of money with interest rates in the free market internet economy, businesses can actually make projections. Businesses can actually plan for the future. Whereas right now, every month or so, people are sitting on the edge of their seat. Companies are sitting on the edge of their seat. Everybody in the world is just waiting for this very small group of men to tell us what the price of money is. It's a really crazy concept. It's just as crazy as the war concept that all of this is set up and all of this is protected, and if you mess it up, then we're just going to come kill you. It's like, really? That's what our system is? But we're supposed to be moving into this age of information and this huge bright future, and we're still using sticks and stones and bullets to make sure everybody follows the rules. Bitcoin replaces those sticks and stones with a true free market. And now the manipulators who are left behind, who manipulate people and narratives with their weapons of mass destruction, and manipulate the price of money with naming the interest rates, and manipulate definitions like changing the definition of inflation and changing the definition of all these different types of economic ideas to fit their narrative. That's all going to go out the window. And when that goes out the window and we build a society based on truth, just the financial portion of our society, but based on truth, so much is going to change. And that's what makes me so passionate about Bitcoin, because it's not only that it makes more sense, it uses energy in a better way, it's free market interest rates, the incentives, the third and fourth and fifth order effects of having proper incentives is going to change the way people live their life.
Mate, Jason Lowry is a Space Force officer with the United States. And he comes in, he's quite a young guy, and he comes forward and he talks about Bitcoin and how it will play into the part of actually being a part of the war machine in itself, but not in the traditional way. Not in the traditional way of bombs and bullets, but rather, how do you produce this value? Now, at the moment, we produce this value from printing it. And I like your analogy. You have well, it's not even an analogy, it's a truth. You have a few guys at the top who tell us every now and then, this is how much money is going to cost. And we're really talking about the chairman of the Fed. And he comes forward, and we all around the world, we all sit around and we say, right, this one guy in that one institution, in that one country, is going to tell us, the world, if we're going to be poor or rich next month, or if the bills are going to be high or low next month. And we all sit back and we just wait to see what happens. When we invert that and we say, well, hang on, let's just put it over to the free market and to innovation and to a computer program, essentially, and we can all participate in it fairly. Now I bring in Max Kaiser. This is where Max Kaiser gets so passionate about it. And he says he's also very excited about what the future brings, because it takes away all that nonsense. It takes away all that mess. And it also allows us to redistribute all that energy and all those resources to other things. Instead of putting all of these resources and all this energy and all this metal and steel and people and bombs and bullets and lives into a war machine, maybe we can do it into the innovation of energy, which actually brings me to, I want to do a thought experiment with you. So we've spoken about how Bitcoin and energy, they're deeply intertwined. I want to ask you, let's say the tip of my pen, something as big as the tip of my pen, had enough energy to run the world's power grid for a day. How would that affect the price of Bitcoin? So think of like in Back to the Future 2, you know, when the mad professor, he opens his time machine and he drops a banana peel and a bit of fluid into his flux capacitor or something in the back of his engine. And it was just a bit of a take on, in the future, we're going to be able to harness energy a lot better than what we can do at the moment. If we could do that, if we could be a Back to the Future professor where we could take the little tip of my pen, drop it into some machine, and suddenly we've got enough energy to travel back in time or run a car for 3 years, and suddenly Bitcoin mining becomes very, very, very cheap because energy is very, very cheap. Would that plummet the price?
Yes, it would. It would, because it's an input cost. So, you know, we can have positive difficulty adjustments or we could have negative difficulty adjustments. So the difficulty adjustment is based off of the block time. You know, if you have less than 10-minute block times, then the difficulty is going to increase because the target time is 10 minutes. And vice versa. If you have block times that are longer than 10 minutes, then the difficulty is going to decrease and it's going to target that 10-minute block time. So if you do have a negative difficulty adjustment, then the cost of production does go down because your miners, that hash rate becomes more efficient in winning the subsidy and earning those Bitcoin rewards. So yes, but this goes into the price of money. So what you're saying is when we go onto a Bitcoin standard, we will find ways to produce cheaper energy.
Yes.
And when we produce cheaper energy, then the price of money will decrease. So see, at first, interest rates with Bitcoin in a free market economy are going to be pretty high. It's not going to be like it was during ZERP with zero interest rates and everybody gets to borrow. No, that's not how it works. Interest rates are going to be pretty high, but don't get too afraid of that, because when interest rates are high, savers earn, right?
That's right.
If you're a saver, you want higher interest rates. And what higher interest rates do is it empowers the saver to eventually become a spender or investor. And it drives real production and growth within the economy. But the first step is getting onto that energy standard. Then once you're on that energy standard, optimizing our control and harnessing powers of energy to lower the cost of production so that the price of money goes down, and then more people get access to it. And then as more people get access to it in a healthy way, not in a manipulated way where it's like rates are zero because we say it. No, it can't work that way because it's not sustainable. You're building on top of sand. You need a foundation of truth. You need a foundation of proven value, which energy delivers to us. So it's amazing how these things interconnect. Kind of goes back to what I say. It's not just money. It's not just finance. It's a science. There's so much that goes into it.
Absolutely.
And placing Bitcoin at the peak of humanity to figure out how we can harness this energy is going to deliver value, not only financially, but in all other forms of humanity as well. And all starts with getting on that energy value input.
Rolling with that example, though, let's say that the future production of whatever Bitcoin is remaining becomes so cheap, like a few cents to produce a Bitcoin in the future. We still have a finite supply and we still have a high demand. So if the supply remains constant and the demand remains constant, or the supply is slightly increasing but the demand continues to increase, even though the cost of production for future Bitcoins goes down, the cost of production for previous Bitcoins and the supply and demand curve that have been established in the past, wouldn't that mean that that price would remain constant at a minimum?
Yeah, it would in some way, because now you got to think of it two ways. Think of the supply, demand, price equilibrium, but then also think about the currency side, right? So every transaction has two sides to the transaction. You have the currency side of the transaction, then you have the goods and the services side of the transaction. When it comes to the goods and services side of the transaction, it's more based on the supply demand equilibrium, right? It's all the supply demand economics creating either a positive or negative price pressure. Then on the other side of the equation, for instance, with USD, when USD is being inflated and it's losing purchasing power, even if the supply demand on that good or service remains constant, the devaluation of the dollar on the other side of that transaction is actually going to force the price up. So when you have a base layer of demand on Bitcoin and you're trying to find a price, what would happen is if the cost of production went so low and because the demand was forcing a premium to the natural asset value, producers would come and increase hash rate. So it's a self-balancing mechanism, a lot like if the price of gold just went to $10,000. Well, if the price of gold went to $10,000 overnight and it only cost $1,800 to produce an ounce of gold, tomorrow there's going to be thousands and thousands and thousands of producers rushing to get involved in the gold mining business because the profit margin is just so high. And eventually they will pull out that gold. Yeah, we only, like you said, the finite amount is not true. That's intellectually dishonest because we know there's more gold out there and we don't know how much. And then in the far distant future, we don't know how much we're going to find. So if the profitability went that high, they'd find more gold and the supply would increase, but not in Bitcoin. Bitcoin supply can't increase. So if the profits become that high, what happens is the hash rate is going to get pushed up significantly because producers, the way Satoshi said it is, as the price goes to a premium to the cost of he said cost of generation. I switched it to cost of production just to kind of easier understand it. But that cost of production is going to get pushed towards the price. So if demand is pushing a premium on the cost of production, well, then eventually all of that additional hash rate is going to increase the difficulty until we get to the point where the cost of generating is at the price. And then that's when you have ultimate stability. So, and it's a self-balancing mechanism. So yeah, eventually Bitcoin will be stable. But if there is any discrepancy between the cost of production and the free market price, that discrepancy will be solved with either a positive or negative difficulty adjustment based on the incentives of those who are producing Bitcoin.
It does link to inflation. So we've touched on inflation a couple of times. And what amazes me in my world is that people are very prepared to invest in a fiat, any fiat, my fiat, your fiat, their fiat, that constantly goes down in value. They're like, yeah, well, 2%. When I was doing my degree in economics, they said, this natural rate of inflation. And then I've listened to other great economists say, well, why is that so natural? Why do we accept that we just have money that goes down in value? And so the argument is We want to stimulate the economy. If you're holding something that's going down in value, you want to inject it into the economy to make things happen. And I say, well, isn't that bad for the environment? Because if I'm just buying landfill junk because if I don't spend it today, it's gone tomorrow, isn't that bad for the environment? And that's where you have this kind of competition between the economics and the environment, or economic stimulation, I should say, and the environment. You want an economy moving and doing stuff, but that can arguably come at the cost of the environment if you're just buying stuff that will end up in landfill. But when it comes to storing your value in money, as I mentioned, many people are quite comfortable with this natural rate of inflation where their money is always going down. It's always going to go down. But when I show them Bitcoin, they say, well, it's so volatile. I say, well, yes, it's so young. But all you have to do is look at Bitcoin in a log scale, and you can see it's just constantly going up and to the right, constantly. But all we hear in the media is that the bumps on the way. Going to inflation, you've unpacked it very well in some of your previous work. Can you help the viewers understand what's the difference between inflation that we really are being told by the media and being told by the main players, that inflation is this one thing, that is prices are going up because of a war in Russia or because of a flu or because of global supply chains, versus the real issue of inflation, of the money printer going brr?
Yeah. Actually, shout out to Max Kaiser, who retweeted my explanation of inflation. And I guess so many people are just like, whoa, wait a second. This is such common sense, right? A lot of economics is just common sense because it's based on incentives. You put yourself in that position, you say, well, what would I do? And then whenever you're incentivized to do, it's pretty much common sense. You're going to do what's best for you. And that creates a positive feedback loop. So when it comes to inflation, here's the first problem, the definition of inflation, right? Because the government says inflation is a general rise in prices. But the free market says, wait a second, inflation is a general rise in prices because the creation of more currency units, stealing the purchasing power of all existing currency units, is making prices go up. So there's that core difference of what the government says versus what the free market says. And that's where the trust element comes in. But if we had inflation the way the government says that we have inflation, we would actually be cheering on higher prices, because the cure for higher prices is higher prices. What do you mean by that, CJ? Think about this from the side of production. It's funny how people think of it from investing and retail, but they very, very rarely do they come from the producer side of things. When the prices are going up, just like if the price of Bitcoin was going up, but the cost of production was relatively constant, what happens? You become more profitable. Well, when you become more profitable in any other asset besides Bitcoin, you can increase the supply. And what happens is when you start to increase your supply, you lower your marginal cost of production. And what I mean by that is, let's say you're a company that makes water bottles, it's much cheaper to produce 1 million water bottles. It's cheaper per water bottle to produce 1 million water bottles than it is to produce 100,000 water bottles. See, so if you're making a lot of profit off of selling those 100,000 water bottles, you take that profit, you reinvest it to produce more supply because you have that demand there for it. And that allows you to lower your marginal cost of production. Well, when you lower your marginal cost of production and then you sell it back to the market, you can actually start to lower prices, because it's not about selling it for a higher price. It's about selling more units. Producers make money by producing more units and selling more units, not necessarily by higher prices. So if we had the inflation that the government was saying today, we'd be like, go higher prices, go higher. Because as they went higher, producers would be able to expand their supply. And as they expanded their supply, it would lower their marginal cost of production. And as it lowered that cost, they would actually be able to lower the front end prices. And when they lower those prices against the consistent supply demand, they can actually sell more units, right? The lower the price, they're going to increase demand and sell more units. So they would actually be profitable. And we would see GDP, not only in the United States, but all around the world, growing at a rate that would be unbelievable. We would never see the type of GDP growth that we would have in the last couple of years if the economy were the reason for the percentage rise in prices we've seen from 2020 until now. GDP would be through the roof. Instead, we're not seeing that. We're seeing that when you account for GDP with proper inflation, right? Because one thing about calculating GDP is that you need to know what the inflation rate is. So when you use the government CPI as a GDP deflator, you come out with an inaccurate GDP because the CPI is wrong. So when the CPI is double what it is today, roughly speaking, here in the United States, and then you apply a CPI that's double the rate of the official number, and you plug it into GDP, you can find that the economy is shrinking. And that's how we have stagflation. That's why prices are going up and the economy is going down. And there's only one way for prices to go up when the economy is shrinking, and that's through the dilution of currency, inflation. So that's the big misunderstanding about inflation that we have today. The government has one narrative that people are trusting in, and the free market has the reality of what's happening. And people are starting to discern between those two different narratives. And it becomes common sense that, well, wait a second. If I'm working more hours and I'm making more money, but I'm buying less stuff, this isn't making sense. If there's more production and more consumption, there should actually be an increase in production, but we're not seeing that. We're not seeing an increase in production to match the growth of prices. So, and I feel really bad for the people who don't understand this, because they're keeping their dollars in the bank. They're keeping their fiat currencies in the bank. And like you said, they're holding through this dilutionary process. And they don't even understand that the culprit is real inflation. It's the creation of all those new currency units, stealing that purchasing power from them. Bitcoin doesn't allow anybody to just create Bitcoins. There's a cost to creating Bitcoins. I mean, the United States, JP Morgan said that it could cost up to $2 trillion. This new Fed funding program could create $2 trillion of new liquidity. Well, that $2 trillion was created through the signing of a law that Congress didn't even vote on. And it was just created like that. There was no cost. There was no proof of work. It didn't matter. It was just created. When it was created, it didn't magically have value. It sucked all its value from everything else. And that's the lie that they're telling about inflation. They want to blame it on you. They want to blame it on me. You're too successful. Yeah, but if we were that successful, then we wouldn't be in stagflation, because the economy would be growing and there'd be more production and consumption. So we literally cannot be experiencing their definition of inflation, because the reality is showing us that prices are increasing at a significant clip, but the economy, even according to their numbers, is stagnant, right? So real GDP with real CPI is negative, but even with their fake numbers, GDP is basically level. It's basically equal. It's not growing anywhere. There's a little bit of fluctuation quarter to quarter, but there's not significant growth. There would be required significant growth to cause the type of inflation in the prices that we're seeing if their definition of inflation was truly inflation. But the reality proves otherwise.
That's right. And when it comes to CPI is such a scam in itself, because you pick and choose what's going to be in that basket to make it look really good. For example, if we put Netflix and mobile phone plans into the basket, well, in many instances, because mobile phones is probably the best example, when mobile phones first came out, they were very expensive because it was a new technology, a new network, and the telecommunication companies had to get return on that investment. So they were quite expensive. Now, if you put that in the CPI basket initially, well, there's nothing to compare it to. But over years, as mobile phone plans come down because it's economy of scale and there's a lot of competition, well, you definitely want to put that in the CPI basket, because, hey, look, mobile phones have gone down 50% per month. But when you look at food as an example, a report came out in Australia recently that proved what I've been saying for over a year, that the inflation rate for many people, because it's also subjective in the sense that if you're a low income earner and the majority of your wage goes to rent and food, that's a very different effect of inflation to those who have the majority of their money going to discretionary things like, I don't know, holidays or new Lamborghinis. So if you think of the battler, as we call it out here in Australia, the Aussie battler, if the majority of their wage is going to food and inflation on food, the price of food has gone up 25%, which is what that report just showed, for that family, the majority of their expenses has gone up 25%. So for them, inflation has in fact gone up 25%. But of course, they don't put that in the CPI basket. They say, no. Your mobile phone went down and your Netflix subscription, that's pretty consistent. And fuel over those few months, well, that was pretty low for whatever reason. So we're going to put that in the basket this month, but not next month. So it's all a facade. It's all a scam.
You're right. It is a scam. And it's gotten so bad that CPI, they're already cherry picking, like you said, perfectly. But then you break it down to what they call core CPI, where you take out energy and food. Like, what? I need energy. I need food. What are you talking about?
Exactly.
Now they're saying super core, where you take out housing. So they want to
Wow.
just, they're starting to strip everything down in order to support their narrative. Again, because it's all about maintaining trust. Where they're starting to disconnect from reality is that family knows I have 25% less of my money because
That's
I
right.
got to eat.
Even if they're
And this is,
financially illiterate, they know. They can feel it. It's like people who understand inflation best are countries like Venezuela, Cyprus, Greece, Argentina. Even if they don't have a degree in economics, they can tell you about inflation way better than the average Westerner, because they know that in the morning their Bolivar can buy a loaf of bread, but in the afternoon, in hyperinflation, they need 100 times that Bolivar to buy the same loaf of bread. They don't have a degree in economics. They're not looking at CPI reports. They just know that their money is constantly going down in value and prices are constantly going up. In the West, I believe we've been sheltered from this for a long time, and we haven't need to learn about it because, there's other things to learn about, whether it's social studies or gender or whatever, the higher level stuff. If we go to Maslow's hierarchy of needs, once you've got the basics, food, water, shelter, and protection, you start to look for your higher level needs, self-actualization, a sense of belonging. Well, that, in my opinion, has now come at the cost in the West of forgetting about those lower level needs: food, water, shelter. And I'm glad you raised the point that they're taking these out of the CPI basket now. Food, water, shelter, the stuff that you actually need to live. We're not even going to measure that anymore.
Yeah, we want TVs and cell phones, not food. You don't need food, water, or shelter. What? Wait, how about we get rid of everything else and we just keep those things? Where's that CPI measure?
I agree.
Right?
Yeah.
The other thing is the intelligence of losing sight of, especially in the United States, with this. Oh God, I better be careful what I say here. But with LGBTQXYZIA, all this crazy stuff that they're trying to do in the United States and forcing it on other people. I mean, people are harming their kids and their children and talking about how this is the proper way. And meanwhile, they can't even figure out that when the Federal Reserve comes out and says, we're going to raise interest rates to fight inflation, that doesn't even make sense. They're actually like, the markets are actually believing the Federal Reserve. They actually believe they can fight inflation by raising interest rates. But you and I both know, when you raise interest rates, you're going to make the problem worse, because just think about it from the only two entities that can create currency units, the government and banks, right? So if the interest rates go up and the government creates currency units by having a budget deficit and spending those currency units into circulation, so they create currency units by creating a debt, basically. Well, if you are borrowing at a higher interest rate, it costs more currency units. You have to create more currency units than if you're borrowing at a lower rate. That's common sense. You much rather borrow $1 billion at 1% than $1 billion at 5%. Duh, right? So as the rates go up, what happens is the government is forced to create more currency units. That's inflation. Now let's talk about it from the banking side. And a lot of people say, well, when rates go up, people don't want to borrow. Look, it doesn't matter if someone wants to borrow. What matters is somebody willing to lend. It's the lender's incentive set that matters more than the borrower's. Sure, when interest rates go up, people are less likely to borrow. But if nobody's willing to lend, then there's no credit at all whatsoever. So the lender's incentives are more important. And when interest rates go up, the amount of risk goes down for the lender. Also, profitability goes up. So it's connected, because as profit goes up, risk goes down. And now risk doesn't go down for Johnny, who's working for minimum wage and knows that inflation is 25%, but it goes down for the people who own the store that Johnny works in. So they get easy access to money. It creates more of a wealth gap, and the banks are happier because they're creating and extending. Look, credit, a lot of people say, you're wrong, CJ. Well, why is credit at all-time highs then? If we just had the most aggressive raise of interest rates in modern history, why is credit at all-time highs? Shouldn't people be running away from the borrowing table? Well, no. Real interest rates are still negative, and the higher the rates go, the more incentivized the banks are to lend with less risk and more profit. And when they lend, when they extend credit, that increases the currency supply. That's inflation. So as the Federal Reserve says they're raising interest rates to fight inflation, that is absolutely absurd, because just thinking through it tells you, no, in both case scenarios, the government will have to create more currency units and the banks will be incentivized to extend credit and create more currency units. So it's an absolute insane concept. What they're trying to do, the only thing that can like theoretically justify raising interest rates to fight inflation is that they want to fight off demand, right? They want to punish the people and destroy demand. It's called demand destruction. But look, there's no demand left in Venezuela. Prices didn't come down, right? Because it's two sides of the equation. You have the supply demand equilibrium, but then you also have the currency unit that's being used to buy the supply demand equilibrium good or service. So even if there's no demand and prices are going down because there's a lack of demand against supply, if the supply of the currency unit is being inflated significantly like it is now, the prices are still going to go up. And that's how you end up with an economy like Venezuela with zero demand and prices still going up. That's how you end up with an economy like Argentina, where interest rates just got bumped up to 78%. Can you believe it? It sounds like a crypto scam. 78% interest rates. And guess what? Prices are still going up because it doesn't matter how much demand you can destroy. It's never going to keep pace with the amount of currency units that are being created. In other words, the positive price pressure of currency inflation is always greater than the lack of price pressure created through demand destruction. And all you end up doing is destroying and demolishing the economy. I mean, this is a recipe for disaster, and it's coming at us like a freight train.
Yeah, and the smoke and mirrors is they say that Bitcoin's a scam. And I'm like, are you kidding me? We are completely transparent. You can see all of this. The biggest scam is fiat and centralized banking. But I will touch on it, and I know you said you've got to be careful, as I do too, because the sadness about the world that we live in the moment is that free speech. So I've served with America, with Australia, I've served with the coalition, and I thought that I was fighting for free speech, but I've had my platform shut down, as in my channel was shut down without warning, without strikes, without any reason. My channel was shut down, and I had to go through a long process to get it turned back on, and I wasn't even told what I said. So I do have to be careful what I say and what you say, because it seems that free speech is an illusion these days, which is absolutely tragic. But I will touch on this. In universities and schools, they force us to learn certain things. Now, what I say is, look, if you're going to force us to learn about all the different genders, the LGBTQI+, so forth, okay. But why don't you force us to learn about economics and money? Why is it that you exclude that out of the education system and we have to learn that? And it leads to this. These are all the distractions that we've had over the last, I would argue, the last 10 to 15 years. There was a religion war, and this is all within ourselves. This is within the West. Religion conflict, gender conflict, color conflict, sexuality conflict, sexual preference conflict. Then we had a flu, then a mask conflict, then vaxxers, and now we've got a Russian diversion. Everything may be important, but it seems to be the center of everything that's happening in the mainstream. When the reality is we are all skating on very thin ice, and that very thin ice is everything that holds up an economy. And the term you used before, that it's all built on sand and these shifting sands, and that is money. Now, when people say, I'm not interested in money, I say to them this, or even if they say, I don't like money, I say, okay, well, give me your wage. And they say, oh, don't be stupid. And I said, well, hang on a second. You said you don't like money. I'll take your money. And they said, well, no, I need money. I said, well, that's right. You need money to survive. That doesn't make you evil. It's a conversion of your time and energy and skill and labor into a battery, that store of energy value into something that you can hold for now so you can spend it later. Now, if you don't understand it, the question is, why don't you understand it? And then when you extrapolate it, it's because, well, we're never taught it. And then you go a step further back. It's like, well, why aren't we taught it? We're taught about all of these other things and all of these, I believe in the current thing, but why aren't we taught about money? And I can't help to think, and I don't want to go down the conspiracy theory, but the problem with conspiracy theories, I saw this meme the other day. It said, the issue with all these conspiracy theories is that they end up being conspiracy facts. And now that we can see that money is starting to collapse, well, not starting to collapse, it's always been collapsing, but it's happening at an exponential rate. Do you think this will ever be included in core education for our kids?
I do. And that's a fantastic question. Especially having 3 children myself. I'm very thankful that I'm in Florida, where we have a great governor in Ron DeSantis who stands up for us, but we also have great local leaders as well, who are clear thinkers, and who have developed things within the curriculum that protect children up to a certain age and then also introduce new ideas to children. I'm always trying to think of ways to teach my kids about Bitcoin and about financial concepts. One time I took my daughter's phone and I said, "Can I borrow your phone?" She goes, "Sure." And then I just walked away. She's like, "Whoa, whoa, whoa, what's going on?" And I said, "Oh, you should have asked for some collateral. You could have had something to trade back in place. You just gave me what you value for nothing. That's not a good social contract." And then she's like, whatever. But it's just planting those seeds and letting people start to understand these concepts from a young age, because these are the concepts on which success and innovation are going to be built on, right? When we're focusing on all these things that, I don't want to say that some of those things are not important. There may be some of those things that are important, and everybody has the God-given right to decide what is important to them. However, there are some things that are important to everybody.
Absolutely.
And money is the core critical, God likes honest weights and measures. And any person with common sense would not go to a store and let them, if it says $2.99 for your carrots and $10.99 for your chicken, and then they ring it up and it comes up $14.99, you're going to say, whoa, 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 hold on 1 second. That's supposed to be $10.99, not $14.99. That's not honest. That's not right. Well, that's the equivalent of what our money is today. It's dishonest weights and measures. Bitcoin is an honest weight and measure. And if we can start there at the foundation, then everything we build on top of it will be built on a foundation of truth rather than a foundation of dishonesty and deception.
If people want to learn more from you, where can they find out about CJ Konstantinos?
Yeah, so the best place to follow me is just on Twitter. It's at CJ Konstantinos. I'm a Greek, so that's with a K. I am currently working on a project called People's Reserve. Like I told you before, I'm under NDA, so I'm not going to talk about it. But I believe all businesses, all financial businesses in the future will be built around Bitcoin as the reserve asset of the internet economy and the most pristine form of collateral in the world. And that's what People's Reserve is. It's a business built around BTC equity, because it's that equity that we're going to be able to build on top of for a sustainable and abundant future. So for me, follow me on Twitter, keep an eye out, and we'll be able to move forward into this future together, not only on a Bitcoin standard, but with financial products and services that are built around Bitcoin as the reserve asset of not only the internet economy, but the global economy.
And my audience would kill me if I didn't ask this. You don't have to answer, but do you have a price prediction 5 years and 10 years for Bitcoin?
I actually created this thing called the Bitcoin fair value algorithm. It's a proprietary algorithm that attempts to measure Bitcoin as an economy. And how do you measure an economy? Based on production and consumption, right? So Bitcoins are being produced and they're also being consumed or spent. And using that algorithm to develop what I call fair value. And remember, fair value doesn't mean that's what the price has to be. It's price relative to fair value to help me as a miner make a decision. Well, do I sell right now because I'm at a premium, or do I hold right now because I'm at a discount? And do I deploy my cash reserves because I'm at a discount and accumulate so that I can sell later while we're at a premium? With that concept kind of overlaying my prediction here, I do believe that at some point in time, Bitcoin will go beyond dollar value. So just remember that, right? Because in the short term, 5 to 10 years, it's like, how many dollars is it going to be worth? Well, at some point in time, it's not going to be worth dollars. It's going to be worth purchasing power, right? And it's like we talked about before. If all the energy in the Bitcoin network going into a 10-minute block, if the value of that energy to produce one Bitcoin subsidy is enough energy to produce a small town, well, then the purchasing power of that block reward at that time will be enough to build a small town. So I don't think I can really put in dollar terms, maybe over the next couple of years, yeah, we're going to, the natural asset value continues to grow. If that person, Jason Lowery, you mentioned, is correct, and governments start to get involved in the production of Bitcoin in order to protect property rights, then that's going to grow significantly, even though the network is already growing significantly. So yeah, the natural asset value of Bitcoin is going to continue to climb. And I think going into the next halving, I expect, based on my current cost of production, that the price of Bitcoin will be between 36,000 and let me see where I got up on my computer right now. The live little feed out, little node action here. 1 second. Okay. So it'll be between 36,000 and 56,000 by the April 2024 halving.
CJ, I've really enjoyed this conversation, mate. You've melted my brain. Bitcoin's so exciting because just when I think I know so much about it, I meet someone like yourself, and I'm like, man, I've still got so much more to learn. And it's good that you mentioned that you're Greek because, as I mentioned, a huge part of my journey was with Andreas Antonopoulos, who is also Greek. So there's some type of connection here between the Greek Bitcoin godfathers coming into my world. But for those of you who haven't met me, my name is Adam Stokes. You can check out my work on Adam Stokes on YouTube or follow me on Adam_Stokesy on Twitter. Buy my book, 28 Pro Trader Tips, The Art of Trading. Also, if you want to do anything crypto safely, go to thecrypto.land. That's www.thecrypto.land. CJ Konstantinos, is there any closing words you'd like to throw in before signing off?
Sure. Well, first off, let me just thank you for having me. It was a great conversation. I really enjoyed it. And hopefully we'll be able to, in a couple months, come back and revisit some of the concepts we were talking about because things are moving fast, right? Bitcoin is like a dog year. 7 years of things happen within 1 year of Bitcoin. In the traditional market, things are starting to move fast and they don't usually move fast. So when things are moving this fast in traditional markets, it's time to pay attention. So don't sleep on what's happening right now. Look through Adam's content, look through my videos, look for my tweets, educate yourself and your family and friends because nobody knows when this catalyst is going to take place. But when trust is lost, the dollar will go from being inflation to hyperinflation, and there's nothing anybody can do about it. So get yourself and your family and friends prepared.
CJK, well said. It's an absolute honor, and I very much look forward to having you on the channel again. In fact, in the future, I'd like to have you on a live stream so I can have some of my viewers ask you some questions live. I hope you can join me in on that.
Absolutely. Thank you. I'm looking forward to it.
CJ, thanks for joining me.